In the past 10 days or so, the world's largest crypto exchange, Binance, and its founder, Changpeng Zhao, or CZ, struck a plea deal with U.S. authorities. Binance admitted to violating U.S. anti-money laundering laws, agreed to pay a $4.3 billion fine, and CZ has resigned as CEO of Binance. A major fall from grace for one of the most powerful and influential figures in the global crypto industry. And at the same time, we've also seen the rise of Argentina's first libertarian president. The eighth largest country in the world has elected Javier Milei, an economist who campaigned on closing Argentina's central bank, replacing the nation's currency with the US dollar, and slashing spending and taxes. The self-described anarcho-capitalist has been supportive of Bitcoin, calling it the return of money to its original creator, the private sector. Here to discuss these developments and more is Cory Klippsten. Cory is the CEO of Swan, which is a trailblazing firm in the Bitcoin financial services sector. Cory is also a partner at the Bitcoin Opportunity Fund and has funded over 60 early-stage tech companies. Before diving into the startup world, he honed his skills at industry giants, including Google, McKinsey, Microsoft, and Morgan Stanley. Cory, always good to have you. Welcome back to Kitco.
It's great to be here and great to see you, Michelle.
All right, Cory, we've got a lot to discuss, a lot of developments to cover. So we're going to look at doing this interview in two parts. But for the first part of our conversation, I want to focus on the Binance news to kick things off. And as we just touched on, last week, Binance and CZ pled guilty to violations of U.S. anti-money laundering and sanctions laws. Some substantial fines being paid, $4.3 billion for Binance Holdings and $50 million for CZ. He's a billionaire, so we don't know how much that's going to hurt. And CZ is potentially also facing up to 10 years in prison, although it's believed that the plea deal could reduce his sentence to around 18 months. He does have a sentencing hearing in February next year. And he's also just stepped down from the board, from his position as the chair of the board of the directors of the US-based exchange, Binance US. It's important to note that Binance US is not a party to the $4.3 billion settlement between US officials, and this deal actually permits the US exchange to continue its operations. Now, while Binance is not necessarily a part of last week's settlement, it is still facing a U.S. Securities and Exchange Commission enforcement action over offering what regulators deemed are unregistered securities to U.S. investors. So a lot to unpack there, but let's start off with what you make of this development, especially considering that you called out Binance and CZ very, very, very early on when he was hailed as one of the great champions and leaders of the crypto industry. What do you make of where we are today?
Yeah, it's been fascinating to watch this unravel, I guess is probably the best word to describe it. And I think there was a lot of new heat on Binance in the wake of the fall of FTX a year ago. It was November of 2022 that FTX collapsed. And obviously, Binance and CZ played a darn near central role in putting the final nail in the coffin there last November. And that then made a lot of the same folks that were looking at FTX start to look very closely at Binance. That goes for the Twitterati investigator crew, that goes for other people with interests in the crypto space, that goes obviously for regulators, whether the SEC or the DOJ or New York Attorney General. They all started to point at Binance with laser focus, and now we're starting to see the results of the work that they've been putting in over the last year.
All right. But one of the things that you were calling out is the actual exchange itself. You posted in December on X saying, remove your coins from Binance. What's interesting, though, Cory, is that the Justice Department's case has not included allegations that Binance misused the crypto assets of its customers. In fact, the charges are related to anti-money laundering controls and compliance with sanction laws. Now, we have seen some withdrawals from the exchange, but the fact that the exchange is still allowed to operate, and again, the charges aren't focused on misusing any of the funds there, do you think that that is yet an issue to be discovered, another shoe to potentially drop here?
Yeah, so those charges are detailed in the SEC's lawsuit, and we're also, I believe, in some of the CFTC's actions previously that were publicized 6 months ago. And I don't think the SEC is done here. It's been proven by people investigating it that there was commingling of funds and that there were assets created that were supposed to be backed one-to-one that didn't have the backing for various periods of time. But most of the charges that Binance is facing here in the US, and my direction was get your funds. I mean, I always say get your funds off of exchanges, including Swan. If you can, if you're willing and able to get your funds off of exchanges, you absolutely should. It's kind of the whole point of Bitcoin. But in particular, in the US, I think there was a period of time when it was operating essentially, and this is all detailed in the charges that have come down since, as just an arm of Binance International. And so there was no actual volume US user to US user. It was all just matching orders via market makers owned by CZ and controlled by CZ that were matching orders to the international exchange. So the whole thing was kind of an illegal facade. And I think that's the shoe, if you want to bring it all together in a nice package, that's the shoe that's yet to drop, is that the SEC is not done with that aspect of the case at all.
Right. So you do still think that there is a very real possibility that the US exchange gets shut down?
Yeah, I think there's a good chance that the US exchange gets shut down or is just completely changed as far as ownership management. And obviously there's essentially government installed right alongside Binance's management, both domestically and internationally going forward, making sure that they comply with everything. So I think you're just going to see Binance as an enterprise dramatically shrink over the coming years, in large part because of these actions.
Right. And that, of course, has consequences, which we will get into. But before we do that, you were instrumental in pointing out, as we've discussed before, SBF, FTX, as well as raising red flags over Binance and CZ. So let's rewind. What were some of the early signs that alerted you that things are not that kosher over at Binance and with CZ?
Yeah, so I have to point out here that I am not, I guess you could call it shitcoin, as we've tried to say without using a nasty word, but that's what we often refer to non-Bitcoin cryptocurrencies as shitcoins. So I'm not shitcoin PI. I don't have a big Tom Selleck. When I tend to get involved in sort of battling it out with these nefarious companies and founders, and historically it's only been a few. I've gone hard at Luna and Do Kwon. I went really hard after Mashinsky and Celsius. I went really hard at Scam Bankster Fraud and FTX. And then I've gone very hard at Binance over the last year and a half or so. And long before that as well. It's just much more focused once we started to understand a lot more with increased effort on behalf of the press and on behalf of interested parties, publishing and posting on Twitter and finding things out and putting the pieces together and understanding how this enterprise actually is run. It's just becoming a lot easier to point out the things that are definitely true and to know where to ask questions about what looks dangerous or looks shady. And so that's kind of where that comes from. In broad strokes, we know that Binance rose into the scene in 2017, and it was the middle of the ICO boom, and they benefited from some of the most popular exchanges of the time. At the time, it was interestingly Bittrex, which just shut its doors last week and decided to no longer be an ongoing enterprise. But at the time, Bittrex was probably the dominant global crypto exchange, or at least had a plurality of the users. And they just couldn't handle the new users coming on. And Binance opened and had a more automated user sign-up flow and just grabbed basically all of the new interest in altcoins and ICOs in 2017 as they launched came to Binance, and that's where they got their initial spark and rose to prominence and rose to dominance, really. But all along, CZ has not really paid much attention to Bitcoin, the only one of these cryptocurrencies that's actually decentralized, the only one that isn't a centralized marketing scheme of some sort, trying to enrich themselves by marketing the price of the token, essentially, from Ethereum on down, Cardano, Ripple. All of these are companies with humans centrally controlling how the thing gets developed and how it gets marketed. And they have massive war chests to go and try to pump the price of their tokens. And that's kind of the entire point of all of non-Bitcoin crypto. And CZ was kind of the number one promoter globally of that model of crypto for the last 6 years. So the way I look at CZ is he's been the number one enemy of Bitcoin for the last 6 years because he's been the most responsible, with Andreessen Horowitz, the Silicon Valley firm, in a close second, and Coinbase and Ethereum consensus, in the top 5, I would say. Let's call it the shitcoin industrial complex. But I think he's been the most powerful actor contra Bitcoin, because all of these altcoins that he markets, that he facilitates, that he launches with his Binance accelerators and all of these token listings and contests and trying to get people to buy these things and markets anything but Bitcoin, I think has been the reason that so many people get so confused about Bitcoin. So it's like you end up with these two camps. One that thinks that there's, the next Bitcoin is what they should invest in instead of Bitcoin itself. And the other camp is like, oh, look at all those scams and, they're all crypto and there's this umbrella of crypto that Bitcoin is part of. And then they just stay away from the whole space. And it makes it very, very difficult for Bitcoin to chop through that noise and help people understand what the signal is in all of that noise.
All right, so you see him as the number one enemy of Bitcoin because he was promoting the shitcoins, as we're going to call them now. And shitcoin PI, I don't know, Cory, you need a mustache, I think, and a Hawaiian T-shirt. And then I think you've got that look down. But as we've discussed, you have been spot on in pointing out a lot of, shall we say, dodgy, suspicious situations that later were exposed to be scams, to put it mildly, in the case of most of them. Let's talk about what we're seeing, though, from this particular charge now, because what has developed is that Binance has been charged with intentionally evading U.S. anti-money laundering laws, encouraging customers to obscure where they were. The government described Binance's actions as willful, exposing the public to significant harm. That's according to the consent order. And Binance was facilitating transactions involving U.S. designated terrorist groups like Hamas. They were involving transactions that were facilitating purveyors of child sex abuse material, real cyber criminals. Binance reportedly acted, and I'm quoting again, as a colossal money laundering hub for terrorists, cyber criminals, and customers in sanctioned countries. So this is pretty dramatic. I mean, this isn't just a couple of AML, anti-money laundering mistakes, right? I mean, we're looking at facilitating knowingly and willfully some very, very, very nefarious groups here that cause tremendous societal harm. And many have said that they think that this plea deal is too lenient, forgetting about the other charges that you said the SEC still needs to come up with, that if this is what the charges are, that this plea deal is actually very, very light. What do you think?
Yeah, so I think that it's probably not that Binance set out to facilitate the funding of terrorism and the litany of other nefarious actors that they had on their platform, money laundering or sending money in different ways. I think it was just that they wanted to have a very lenient approach to KYC AML, and that's know your customer and anti-money laundering. And they wanted anyone globally to be able to trade on their platform. They were trying to have the most liquidity, and they were willing to play not even fast and loose with the rules, but just to ignore the rules to try to gain market share and try to gain liquidity on their platform and get everyone to list there and get everyone to trade there. And that was the game that they played. And they knew at some point there would be a crackdown of some kind. And they're playing out something that everyone in the space, if you were paying attention for the last few years, knew that this was inevitable. And it would just come down to how they fight it out and what the punishment is. But this was never going to be allowed to continue unfettered forever.
All right. So you're giving them the benefit of the doubt there. Let's talk about that. A little bit. I mean, you're saying that they weren't intentionally trying to facilitate.
They were intentionally trying to facilitate everybody all the time. And so some of those people were bad, is what I'm saying.
Okay.
But, if I were to guess, did CZ actually directly deal with mafia figures in countries around the world to try to make it easier for them, knowing what they were up to. I doubt that.
Right.
I think it was more, let me turn a blind eye. Let me make it really easy for them to KYC with some offshore entity without poking through the way you would have to in the USA and finding out who actually controls that entity. That's probably, it was kind of wink, wink, nod, nod, look the other way, but not
Right.
direct dealing with these nefarious characters.
All right. Nonetheless, some pretty serious consequences of helping to facilitate or not standing against facilitating these transactions or looking the other way, as you mentioned. And there's some thinking that authorities have allowed this exchange to continue operating now, and that this penalty is somewhat lenient, at least at this point. And as we've discussed, there may still be another shoe to drop, but that it's not as excessive an action, or that the entire exchange hasn't been shut down, in order to avoid panic and in order to avoid a bigger contagion impact to the rest of the financial sector. Because if we had customers rushing to withdraw their funds, that could lead to contagion and consequences to other financial entities and to the traditional financial sector at large, and that things are a little precarious in the economy, that this is why authorities have kind of let it continue operating for now. What are your thoughts on that?
I don't see any validity in that claim that there's a risk of contagion into the traditional finance sector from shuttering Binance, let's say. They would still allow people to withdraw, obviously, so you're not out of your assets. One thing that does appear pretty likely is that while they may have had some mismatches here and there, for the most part, it looks like Binance assets are full reserve, and that hopefully remains true. Hopefully it's true, and hopefully it remains true. But if that's the case, just shutting down the exchange or having a lot of people sort of file for the exits, that's not going to affect the largest assets, like Bitcoin in the first place, because people just withdraw their Bitcoin to somewhere else. It's not going to really change what they do. And again, this whole sector of Bitcoin plus the ship coins is such a drop in the bucket versus the global asset pie. The chance of contagion across into other major asset categories, I think, is nil.
All right. If the exchange does get shut down in the future, as you expect it may, what impact do you think that would have?
What I think they're actually going to do, I think they're going to bleed it dry by letting every single investigator globally have access to everyone that's ever traded on Binance and try to catch criminals globally and dragnets, essentially using Binance's historical customer data as the honeypot. So I think that's probably what they'll try to do, is they've just essentially executed a government takeover of Binance, and they'll use it to try to ensnare people, and they'll use it for investigations of things that have happened over the last 6 years.
All right. Now, we haven't actually seen much damage to the crypto sector at large, and certainly not to Bitcoin, despite this news. I mean, Bitcoin has been surprisingly resilient since CZ stepped down and pleaded guilty. Bitcoin up around 2.8%, currently trading at around $38,000. So what do you make of that? That we have this major development, the world's largest crypto exchange based on volume, being ensnared by US authorities, and Bitcoin shrugging this off?
I think there's two major things at play. One is, obviously, I'm going to tell you what I believe, which is that people who actually have a lot of money and a lot of Bitcoin, and whose opinions thus matter more for a monetary protocol, they know that Binance wasn't important to Bitcoin, and probably know that Binance was actually bad for Bitcoin. And so I think that's one thing. And the other one is, if there were some downdrafts because of people being skittish, and prices are set at the margin, so if people were scared of something happening to Binance and thus maybe to Bitcoin, I think their fears are outweighed by all of the bullish news about the spot ETFs likely to pass and go live here in the next 1 to 4 months from BlackRock, Fidelity, et cetera, here in the USA.
Okay, and we'll certainly get into that, because the contention is made that eliminating this has in a way cleared the path for the spot Bitcoin ETF approval, or certainly removed one of the big obstacles. But Cory, on the flip side of this, there's been the conversation of Operation Choke Point. and that authorities were looking at cracking down on exchanges and various operations in part of a bigger bid to derail the cryptocurrency mission and particularly the Bitcoin mission, that this is all perhaps some part of a bigger project to, cut off the on-ramps and off-ramps from traditional finance into these exchanges and start eliminating the bigger players. How do you see this development in the broader context of some of the theories regarding Operation Choke Point and regulators' seeming willingness to start cracking down? I mean, do you think that this is just fair because it's a legitimate situation that needed to be addressed, or do you see it somehow playing into that Operation Choke Point narrative?
So I've been a big seller of Operation Choke Point 2.0, whatever it is, for quite some time, and pretty public about saying that's kind of BS. And the way in which it's BS is thinking that there's some kind of cabal or little crew that got together and decided to orchestrate this across different branches of the government. I think what you're seeing is an obviously necessary, according to the mandate of the SEC, backlash against the selling of unregistered securities to retail investors around the world over the last 6 years. And so that was naturally going to happen. And that is a backlash against the entire non-Bitcoin shitcoin space. And then you're also seeing from state and treasury a lot of concern about AML and KYC and sort of using these crypto rails, including Bitcoin, to facilitate money laundering. And so that's why you're seeing something else coming from that side. So I don't think there is anything particular coming targeted at Bitcoin for sure. I think there's these two things happening in concert at the same time, largely brought around because of the bad actors, the DCGs and the Geminis and the FTXs and the Binances over the last 6 years. And we're just kind of seeing an end to that era. And obviously we have to suffer from the backlash because in the mind of so many in journalism, so many in government, and so many participants in the marketplace, Bitcoin has been bound to all of these non-Bitcoin scams deliberately by the affinity scamming marketing practices of all of these trying to say that they're as good as Bitcoin or better than Bitcoin in some way, or Bitcoin is old, this is new. It's always Bitcoin that's in their pitch, right? Every time in the deck. So I think.
So to be clear, you do not believe in the validity of the Operation Choke Point 2.0 theory?
It's misleading to call it Operation Choke Point 2.0 because there is no operation. That's what I'm saying. I'm saying that I think these are natural reactions from the powers that be to the bad things that have been done in the crypto space over the last 6 years. So it's inevitable that the SEC would go after securities scams, and it's inevitable that state and treasury would go after money laundering. And they're happening at kind of the same time. And obviously a lot of banks are going to look at that sector and say, that looks risky, easier not to serve them. Let's not. And only a few banks that actually have relationships with the good firms will actually pick that up. We've had banking all throughout because we can go and we can meet people and we can explain what our business is and that we're much more like a Fidelity that focuses on Bitcoin as the centerpiece of what we do, but that's not a security and we're full reserve and we encourage self-custody and all these other things. We kind of have the markings of a white shoe financial services firm. So it's much easier to make that case when you're talking to a bank if you are not involved in any of the scammy behavior.
All right. So to the likes of like Caitlin Long from Custodia Bank, who has maintained that she believes that there is an Operation Choke Point 2.0 kind of initiative, which looks at defunding the new players or cutting off access from traditional finance or not giving them the same sort of regulatory approval as other banks. You just think that that's a coincidence or just part of how regulators operate in this new space?
Well, in the case of Custodia, and now, Caitlin's obviously been a great Bitcoin advocate, but there's also a lot of blockchain and crypto things that she's wanted to do with her plans there. And when they got rejected for their charter, I think in their plan and in their application was to launch a stable coin, which is something that invites a ton of scrutiny. And, there's only really a couple that have gotten through and been allowed to continue to operate in the USA so far, and only one at any sort of scale, being the Circle USDC token. So I'm not sure. Like we don't have any trouble whatsoever with regulators doing a Bitcoin financial services company, and none of the Bitcoin only financial services companies have any issues with regulators. And so I think, if you start getting involved in the rest of the shitcoin space, by definition, you're inviting regulators into your living room.
Okay, it's all back to shitcoins as we're now coining them. Let's move to another, if you will, conspiracy theory, or a theory that is raising some eyebrows, and that is the involvement of Binance's new CEO, Richard Tang, with the World Economic Forum. Richard Tang is a seasoned industry veteran. He's now taken over the reins from CZ. He previously spearheaded Binance's global compliance initiatives. He's also served as the CEO of the Financial Services Regulatory Authority at the Abu Dhabi Global Market, and as the Chief Regulatory Officer at the Singapore Exchange. And he also has a curious connection to the World Economic Forum. They have a page dedicated to him on their website. The specific details of his involvement or role within the World Economic Forum seem to be a bit hazy, a bit unclear there. But what are your thoughts on this, Cory?
I think the signal in all of what you just said is that he has a deep regulatory background. They happen to be posts in relatively lenient jurisdictions historically, Singapore and Abu Dhabi. And so that doesn't necessarily mean that he's going to play, right in concert with the way that DC would want to play things. But he does speak their language, and he does understand the negative repercussions of actions that Binance has taken historically. And, I think they put him in as CEO deliberately to say, hey, we're going to play ball. CZ just really doesn't want to go to jail for very long. That's kind of his main goal right now, is to keep as much of the money that he made over the last 6 years as he possibly can, and to spend as little time in jail as possible. And so I think he's just saying, listen, government, I'll give you this guy as the new CEO, and promise you we're trying to do everything we possibly can. Just be nice to me.
And what about the World Economic Forum potential connection?
I see this every other day on Twitter, because the WEF website people can put anybody on their club if they want to. And if you've ever spoken at anything that WEF was involved in, it seems like almost everybody has a WEF page. I hope I never get one. I've never done anything, but it's very possible that I might accidentally accept a speaking engagement sometime, and somebody will put me on their page or something like that. But World Economic Forum is just kind of like, it's like a business club. It's probably like a chamber of commerce, but it's mostly just it's like Boomer and Gen X Instagram, essentially, for the political class. It doesn't really mean much, and it doesn't really do much.
Well, it depends on who you talk to, Cory, because there are certainly a whole bunch of people who think that the World Economic Forum and a Klaus Schwab at its head, and the involvement of world leaders like Bill Gates, are all part of some big Great Reset agenda. And the World Economic Forum has declared as much, that one of their policies is for the world to owe nothing and be happy, and create a great reset of the world order. But we won't get too far into that particular rabbit hole, at least not in this conversation. It is a topic that we've discussed at length on Kitco, but you're saying let's not make too much of a big deal of the fact that Richard is featured somewhere on a website for the World Economic Forum. All right, fair enough. Let's go back to CZ, who, as we've just discussed, you called Bitcoin's public enemy number one at some point, and you have actually made this comment quite consistently. You also said that you've thought for years that Binance is a dramatic net negative for Bitcoin. You've explained why, that it's taking attention away from Bitcoin by focusing on other cryptocurrencies. So CZ being gone, what does that mean for Bitcoin? I mean, is this all a positive for Bitcoin? And if so, to what extent?
Yeah, it just removes so much noise from the marketplace. For the last 6 years, since 2017, the top of funnel for people to get into Bitcoin, what they're drawn in by first was all of these ridiculous claims from the shitcoin promoters like Binance and Coinbase and Ethereum and Consensus and Andreessen Horowitz, right? It's just pump and dump after pump and dump and all these false claims about blockchain, crypto, whatever, DLT, NFTs, all these things that were supposed to be amazing, metaverse, and it's just all proven to be trash. And then on the other side, now you have this incentive for the largest, most credible, most trusted financial services firms on the planet, the BlackRocks and the Fidelities of the world, to go out and promote Bitcoin. And so what I've been saying for the last year, as we've started to get rumblings that these spot Bitcoin ETFs might actually launch, is they're going to come to the Bitcoin experts, the Bitcoin mouthpieces, the people that actually know a lot about Bitcoin to help market those things. And that's the new top of funnel. So now people are going to discover Bitcoin by learning about Bitcoin instead of having to wade through all of the noise from the nefarious shitcoin promoters. And that's a massive positive for Bitcoin.
All right, so let's talk about the spot Bitcoin ETF and the involvement of these major institutional players like BlackRock, which we have discussed at length before, and we'll drop a link to that in the description of this video, where you and I have really discussed BlackRock spot Bitcoin ETF and the implications there. But it does seem as though with the Binance situation sort of put aside, at least one part of it legally, that the chances of a spot Bitcoin ETF have increased quite dramatically. What are your thoughts there?
Listen, I'm not a better handicapper than Bloomberg, and I think they're putting it at 90% chance of passage by January, which is unbelievable. And I think the reason that there's a deadline of January is because they don't want to give unfair treatment to ARK, I believe, is one of the two that has a deadline of January, and then the rest be kicked down the road to April. But basically, if they're going to pass ARK, they kind of have to pass everyone at the same time, I think is the way they're thinking about it, because otherwise it just looks really bad. So that's it. I think it's January 10th or 11th, I think is the deadline when we ought to know one way or the other what's going to happen here. So,
and do you see a whole number of ETFs approved at once?
That's what I'm saying. I think they will have to approve all of them at the same time. And it's,
I think there are about like 12 active applications. So you see all of those getting the green light like pretty much on the same day.
Unless there's something wrong with their application and they don't plan to grant that application, which won't happen for any of the big ones that have good lawyers. So all of the big guys will get through at the same time. And there may be stragglers that get left and have more comments or something.
Yeah, you mentioned Bloomberg has it at 99%. There's a report from Matrix.
Did you see 99? I saw 90 last week.
I'm just quoting you, Cory. 90%. We have a report from Matrix Sport, an analyst there, Marcus Thiel, and he's saying that he sees it as 100% possibility. I say nothing is 100% in this life except for death and taxes. So I don't know that I would agree with those odds.
Death, taxes, and Bitcoin.
I kind of knew we're going to complete that sentence that way, as one would expect from a man wearing a Bitcoin t-shirt. I'm still going to stick with death and taxes as my 100% possibilities that I'm aligned with. But let's say that January 10th, 11th comes and there is no approval. What would that indicate?
Yeah, I mean, that would mean that it would mean that BlackRock has its first ever or second ever failure in trying to get an ETF passed. I think they're 575 out of 576 or something like that. So yeah, it's hard to imagine why that would happen. I have to think that would be, one of these unknown unknowns. We don't know what that reason would be that they wouldn't pass it at this point. So to recap some of the roadblocks, it mostly came down to being worried about manipulation of the spot price of Bitcoin and having people being able to manipulate the price of the ETFs that would be regulated inside the USA. And so, as you were saying earlier, maybe you were kind of hinting at it about 20 minutes ago, maybe one of the things that had to happen was reining in the offshore unregulated crypto casino volume trading in Bitcoin from venues like Binance before you could greenlight in a spot ETF in the USA. So that's been done. You have the surveillance sharing agreement that Coinbase has done, which means that regulators can see inside of Coinbase's books and sniff for manipulation and be able to look at that as it trades versus CME futures and versus spot ETFs in the near future, probably. So that's probably an important element that wasn't in place if somebody was applying for an ETF a year ago. That happened in 2023. So a few things like that have fallen into place that make the reasons to deny a spot Bitcoin ETF pretty much down to almost nothing, if not completely gone.
All right, but if it doesn't get approved, does that necessarily mean that it's dead in the water or just delayed for whatever reason? I mean, would you still be optimistic
There
if
would be a
January
reason.
comes and goes and we don't get any approvals? Would you still be optimistic that this is something that could still be quite likely to happen?
Yeah, I would. I think eventually it's inevitable. If for some reason it doesn't pass in January, or for some reason they reject the two for good reason that are due in January for a decision, and then also turn around and reject the other 10 in April, then it would be for a reason that I don't think that we have on the table yet today. I don't know what that is, and maybe we'll find out what that is, but I still have to imagine at some point, if that's cleared up, there would be no long-term reason to bar this from happening.
So the big question is, what does that mean for the price of Bitcoin if it is approved? Now, I know, Cory, you're a long-time hodler. I know you see Bitcoin as a very long-term safe haven store of value asset that you're not necessarily interested in immediate price moves. But for the viewers that are, do you have a forecast on what happens on the approval? Is that already priced in? Is it one of those buy on the rumor, sell on the news events, or do you expect a significant increase on news of approval?
Wait, who said I wasn't interested in price? I love seeing number go up.
I know you love number go up, but I know that in your heart, that's not the motivation here.
Yeah, I'm not interested in trading, but I do look at Bitcoin priced in dollars, the current global reserve currency, as the most obvious metric of Bitcoin's success. That's what shows us, since supply is fixed at 21 million, all we have is increasing demand among 8 billion humans to show us how good we're doing at driving global Bitcoin adoption. It's a monetary network, and the more value that flows into the protocol, the higher number goes.
So for the price to go up, for the number go up, people, what are you expecting?
It's going to be a deluge of money coming in through these spot Bitcoin ETFs. I don't want to put a number on it. I would just say, if we were thinking about a bull market, this would probably accelerate it, make it happen a bit earlier, quite a bit earlier potentially than it has in previous cycles. For anyone kind of new to Bitcoin, historically, because of the way that Bitcoin protocol issues new coins every 4 years or so, there's a lot of pressure on the price to go up a little bit after the halving, which is the same as election years, interestingly. So about 6 to 12 months after 2012, same thing after 2016, same thing after 2020, there's been a bull market. So there've been these 3 large price spikes over the course of about a year, and spaced pretty close to 4 years apart, which has been pretty fascinating to watch. Because you would think with efficient markets and everybody being able to see this, wouldn't we just bid up the price now? But the way it interplays with Bitcoin mining, and again, the issuance rate of the currency from the protocol, we keep on seeing these bull markets. So if I were just looking at it and there were no rumors of an ETF and no expectation that they would pass, then I would be normally looking at a budding bull market toward the end of 2024 and rolling into early 2025. But I think we've already had people front running this news quite a bit. We've seen a price rise from about 25,000 per Bitcoin up to 38,000 already just in the last month and a half or so. And I think that it's very possible that we could see quite a ridiculous first half to 2024, which would be way out of band for what has happened with Bitcoin according to historical cycles.
Am I going to get a numerical value or a number for quite a ridiculous
Yeah,
upside?
of course you are. Of course you are. Yeah, I'll give you the same one that I've been giving for years. That we will have $1 million per Bitcoin in 2030.
$1 million per Bitcoin in 2030. All right. Well, who knows what that means with the way the purchasing power of the dollar, but I guess that's exactly why you have Bitcoin. I'll give you a number from Bloomberg, seeing as we cited Bloomberg earlier. Bloomberg Intelligence estimates that the ETF market, the spot Bitcoin ETF market, with the players like BlackRock and Fidelity and Invesco getting involved, has the potential to grow into a $100 billion market in just a few years since as soon as the spot Bitcoin ETFs get approved. So $100 billion like flowing into a spot Bitcoin ETF that in itself is obviously going to be super dramatic. Let's bring it back to what this means for Swan, because obviously with a spot Bitcoin ETF, it eliminates some of the friction of getting into Bitcoin. And for many people, the challenges of self-custody are very real. It seems to be an issue of quite a challenging barrier to entry for those that don't want to go into an exchange, never mind keeping money on an exchange or keeping their Bitcoin on an exchange. The whole idea of a wallet, as we've discussed before, and self-custody is super challenging. And to many, a spot Bitcoin ETF sort of allows them to get exposure to Bitcoin and eliminates all of those hassles. So what does the spot Bitcoin ETF mean for a business like Swan?
Yeah, I think it's going to be incredibly fascinating to market against our new friends that are also marketing Bitcoin. But at its core, when you have somebody come in through, again, this new top of funnel, and maybe they get into a Bitcoin ETF because it's super easy now, as you've described, it's right there in their brokerage account. Now they have selective attention for Bitcoin. They may be watching the price move a little bit. They might find a Bitcoin podcast. That Bitcoin podcast might be advertising Swan. Our ad might say something like, real Bitcoin, no fees, something like that. Or may point out that you only pay for it once if you're paying through Swan Private Client Services or something like that, but you don't have an annual custody fee. I believe these ETFs are all going to pretty much price around 75 bips per year. So, that's going to whittle away at your Bitcoin stack over time versus holding the real thing and not having to pay that custody fee or that ETF management fee. And again, you've got an IOU. So depending on your threat model, especially for buyers around the world, if you think that your local government can confiscate your accounts, or you think that for some reason somebody might come after you in some way, and you can't do the self-custody, you can't take advantage of self-custody the way that Bitcoin was designed, that's something that people don't usually gravitate toward. That might be 5% of users are drawn in by that particular aspect of Bitcoin. Most people come to appreciate it after they've bought some Bitcoin and they hold it in an account with a centralized player like a Coinbase or Swan when you're not taking self-custody from Swan, and then they progress on their journey. We see this in the numbers, right? So, historically, out of all users we've had at Swan, about 50% of our users still have the Bitcoin that they've purchased with Swan in custody with Swan. But the vast majority, so the larger buyers, the people that have been around a little bit longer, that have had more time to learn and have gone deeper and thus bought more, most of them actually withdraw their Bitcoin into self-custody. So over 82% of the Bitcoin ever bought through Swan is in self-custody off the platform. So that's how you can kind of see, half the users, 82.5% taken off.
Right. And of course, as we've discussed before, the whole idea of Bitcoin in its purest form is to allow you to have autonomy and independence from, the system, and therefore there are advantages that are tremendous for having self-custody, although there are some complications and risks, as we've discussed as well. You mentioned advertising. I think I'll take this opportunity to make a full disclosure here that, of course, Swan has been affiliated with Kitco and On the Spot, and you have advertised on Kitco and have sponsored some of our programs. And we are very careful with who we have sponsoring our shows. And to that end, we carefully vet our sponsors. So I will ask you a question that I'm assuming many of our Kitco viewers want to know, and that is, how can people feel safe that their Bitcoin is secure and safe in the hands of Swan, especially when we've just discussed a whole list of scams and shall we say, less than wholesome operations? What makes Swan different here?
Yeah, so we have been incredibly thoughtful about how to make our Swan users Swan-proof, essentially, from the very get-go. And what that means, being a US domiciled and regulated company in the US jurisdiction, is we figured out that we could let people, upon sign up, just in a couple of minutes, actually automatically create an individually owned, legally segregated trust account for every single user, whether it's a retail user, a high net worth individual, an IRA account, it can be a business, whatever it is, you're getting that individual trust account. And so you have three different companies. You have the trust company that is aware of your balance and actually has the legal ownership secured for you in the event that Swan goes bankrupt or something. Then you still own that trust directly in your name. And then you also have the custodian. So the trust company is not the custodian of the physical coins. That's BitGo on the back end, that actually has been in business for 11 years and is the largest Bitcoin custodian outside of Coinbase, and probably has the broadest set of commercial and industry customers. And so all three of us have to agree. This is getting toward that vision of multi-institutional custody, but in this case, it's a layered custody setup where we know what your balance is. They can't do anything without us saying, and we can't do anything without them confirming. And at the end of the day, the Swan user actually owns it, and it's bankruptcy remote. And again, individual accounts legally segregated from the other assets. And it's impossible for Swan to unilaterally touch or move your coins in any way. When you're entering instructions through the Swan app or through the Swan website, that's you entering something that is passed along by API to the settlement partner and to the custodian, and taking actions on your own money and your own assets. So that's how we think about the setup. It's sophisticated, and it's the best way that you can legally set up custody and brokerage in the United States for this asset. And then for people that are interested in self-custody and taking that step, we have gone above and beyond with the Swan Vault. So you can check that out at swan.com/vault. And this is multi-signature custody. One of the top software companies in the world that was working on multi-sig solutions. So this is basically saying, instead of having just one key and maybe having the password written on a piece of paper, you have 2 out of 3 keys. So if you're holding 2 and an institution or partner is holding 1, you can keep 1 key kind of more available in the event that you want to move, and then just ask the custodian or ask Swan to help you enact that transaction. But Swan can't move anything on its own. You can, however, because you can also go and grab your other key out of deep storage, out of a safe, out of a safety deposit box, wherever you have that other hardware wallet. And then you can actually do transactions without the custodian, without your partner Swan being involved at all. And again, this is not 101. This is probably 201. It's not an advanced degree. It's not a PhD. It's actually quite easy. My parents use it, and they're boomers, and it's not that hard. But again, it's something that we walk people through and help them get to when they're ready for it. And it's very popular with Swan Private Client Services. That's our high net worth division that serves people in 75 countries around the world. The Swan app is USA only, but once you get over, wanting to buy $100,000 worth of Bitcoin or more, then you should check out swanprivate.com. And that's where we walk people through how to think about Bitcoin in your portfolio, and how to think about inheritance, and how to think about, again, the use of a custodian versus multi-sig versus pure self-custody, and kind of the trade-offs, and walk you through all the different pros and cons.
Right. Well, I mean, that is arguably for a wealthier, perhaps even more sophisticated investor. But one of the products that you offer that we have actually had as a sponsor on the show is the Swan Bitcoin IRA, which is perhaps for a more retail investor and requires less work. Let's talk a little bit about that. Firstly, what is the advantage of having an IRA, a retirement account that buys Bitcoin?
Yeah, so you're just looking at one of the best savings structures that exists, which is tax-free growth in a retirement account, and the government leaves that alone, so you don't have to pay cap gains tax as you go, and you can withdraw it tax-free upon retirement. So it's again, that's with a Roth IRA, or you can defer your taxes if you have a traditional IRA and only pay those on withdrawal after you're 60 or 65 or whenever it is that you retire. And putting Bitcoin in that vehicle just means that you're going to have more Bitcoin over time. And you want to work with a partner that is thinking about security at all times and that is not soaking you for fees. So traditionally, this has been one of the structures that companies have set up that have been the most egregious when it comes to putting load fees in there and having massive trading fees, and or just marketing the trading of altcoins and trying to convince people to use their IRA to be essentially a gambling function.
All right, but let's talk about Swan's fees here, because you're a business, you're making money, right? So what's your revenue for the Swan Bitcoin IRA product? Where are you making money from?
Absolutely.
What are the costs that users are getting charged and that they should be aware of?
Yeah, so we just have a very low fee on rollover purchase. I think it's 99 bips, which is 0.99%. And then there's just a low monthly fee. It's kind of the lowest that's out there for non-rehypothecated. So if we're not lending around your Bitcoin and letting people gamble with it, which a few of these sites will do, you do not want that. You want your Bitcoin to just sit there in custody and gain in value over the long haul. We have the lowest custody fees in the market for that. So low fees to buy or transfer. A lot of people do rollovers from 401ks to get started with Swan IRA, and the lowest custody fees in the market.
And how does Swan Bitcoin handle the custody of the Bitcoin in its IRA accounts? Because obviously you can't have self-custody in that situation.
Yeah, so we've looked at that and we've looked at that very closely, and basically internal and external counsel have deemed it too risky to have self-custody or even multi-sig within an IRA structure, because there's the concept of having unfettered access. So it basically has to be arm's length, and you can't just access it or move it at any time of your own volition without an institution, a custodian being involved in checking that off and reporting your balances and movements to the IRS. So that's kind of one of the key tenets of the IRA structure. And so that one is fully custodied with BitGo and with our settlement partners. So that's a fully custodied product.
So Cory, let's assume I'm 22 years old. I'm not, but let's assume I'm 22 years old. I've just started my career and I want to start saving Bitcoin, and I open up a Swan IRA account. How can I feel comfortable that in 44 plus years, who knows what the retirement age will be by then, but let's assume it's around 66, that in 44 plus years I will be able to access my Swan Bitcoin IRA via Swan, via BitGo? How can I feel comfortable knowing that in 44 plus years, if I go onto swanbitcoin.com, there is still a way for me to access all the money that I've spent so hard working for and saving in the form of Bitcoin?
Well, this is one thing this is not a new problem that we need to solve fresh. This is something that's been around in traditional finance for ages. I've had companies that I've held retirement assets that have merged or shuttered or whatever, and there's a process that they have to go through to notify, and you transfer those assets to another qualified custodian. So it's not that complicated. We've actually switched custodians in the not too distant past, and we're just able to move all of the assets over and keep the ledger and transfer the entire ledger and all the assets over in a matter of days. So it's not really a hard or new problem when it comes to that. When you're dealing with just accounts like that and all the assets are custodied with a qualified custodian, it's very easy to just transfer them over to another qualified custodian, notify all the customers where their assets are.
And what are some of the precautions that Swan Bitcoin, has in place in terms of any kind of insurance for the funds deposited? What are some of the measures that Swan Bitcoin has in place to protect the IRA account holders?
Yeah, so we have I put two arms on this. One is, I guess, just our incredible attention to risk and fraud, just making sure that our users don't get defrauded. And so we have built an incredible team and layered on all the best tools in the world and put them together in a very sophisticated way to make sure that we don't get defrauded and that our users are protected and don't lose funds. So that's one side of it. And then on the insurance side, which I'd say is the other arm of this, the way that BitGo does it is they have wallet level insurance, meaning that they're insured up to a certain amount. I believe it's $250 million per wallet security incident. And so what they do is they make sure that there's never more than that much value in any single wallet for any of their customers. So that's how, and we get a ping anytime one of our wallets is hitting 150. So they get way out in front of it in case there's some kind of massive price run up, and they split that wallet once it hits 150. So we see that in action.
All right. So you've taken serious measures to protect against that. Sticking with the fraud theme, although your measures are, of course, clearly anti-fraud, I want to bring it back to, this idea that you have been you don't want to call yourself shitcoin PI, but as we've discussed earlier, you have been instrumental in calling out so many of the nefarious players. You called out SBF and FTX, and you called SBF a fraud at the time when he was seen as the golden boy of crypto. You raised the alarm there. You were actually instrumental in exposing the fraud when you were given the Alameda balance sheet to analyze by the CoinDesk report. And we always like to know, because of that, if you have any other people on your watch list. I know you don't want to be called shitcoin PI, but seeing as you've done such a good job of that, Cory, anybody else that you're a little bit skeptical of at the moment?
Look, you're going to be right over some period of time, no matter what. Anytime you call out pretty much anybody in the shitcoin space, like they'll end up digging their own grave at some point if the regulators don't get them first. So you have 100% hit rate if you're calling out bad actors in the non-Bitcoin crypto space, essentially. I don't know. I generally get interested when they come sniffing around Bitcoin. The reason I went after Do Kwon and Luna is because he started talking about having a Bitcoin treasury for his scheme, and I thought that was crappy. And I started going after Mashinsky because he started saying that Bitcoin buyers were better off with him storing their Bitcoin into his Ponzi scheme than taking self-custody. And Sam Bankman-Fried caught my attention because he was trying to buy BlockFi, which had a lot of Bitcoin deposits from a lot of people. And it just seemed weird that he would want to be bidding for something that had negative value. It seemed like there had to be some weird reason under the surface for why he would want to buy that business. And I didn't buy that it was because he was a good Samaritan. So again, I tend to get interested when somebody does something shady that involves Bitcoin in some way, because that's when it hits my radar. So, I will say, I think the chances of the downtown Los Angeles sports arena where the Lakers and the Clippers and the Kings play, the chances of that one having the same name on the arena for the next 7 years are 0.
Okay. Cory Klippsten, not shitcoin PI. We do want to get your thoughts on other big players and Bitcoin, and that is, of course, the president of Argentina, who has been very supportive, it seems, of the Bitcoin mission at large. But we're going to take a quick break, and we will discuss that in the second part of this interview when we come back. So stay with us.